about 4% gains. The stock that has gained 4% this week is Dodla Dairy. And it's important largely because the dairy stocks have been in focus all of this week. And Dodla Dairy has actually outperformed. If you look at the week-to-date performance of all the dairy stocks, Dodla is up 4% as against the others, which are actually either up 2% or lower by about 1.5%. That's about this week. How have things changed from the third quarter end to now? To get an update on demand and pricing for dairy products, we are joined by Dodla Sunil Reddy, who's the Executive Director and Managing Director of the company itself. Thanks a lot, sir, for joining in. Always a pleasure speaking with you. And that's really the first question, from the end of the third quarter, which had the festive season, etc., to now, how have the dynamics of the industry changed? Have you seen any change in, consumer sentiment, any increase in milk procurement prices, any change in prices itself?
First of all, good morning and thank you for having me on your show. Yes, we have seen a bit of price increases in procurement, and it's normal because now I think almost for 18 months milk prices have been static. We have seen a little bit of offtake in consumption also increasing, and due to that we are also seeing a little bit of price increase happening on the procurement end. And I think the corrections have already taken place also on the selling end. Although not a significant movement, a minor movement which has happened, and it has been there. What we are happy about is we are seeing an offtake of consumption again coming back, and improvement in consumption overall, which I think will be good for us in the coming quarter and the next, because summer now is also good for our seasonal products like curd, ice creams, and we're hoping that they'll do well for us.
If you could quantify the increase in procurement prices, how much has that been? And if you could also tell us how much has consumer offtake been increased, how much have you been able to pass on the price increase?
Price increase would have been around 2 rupees per litre of milk, which has approximately been the same kind that we have passed on to the consumers based on the whole mix of products that we have.
Okay, all right. Hi, Mr. Reddy. Good morning. Nigel on this side. Good to have you on the show. What about demand? How has demand been in Q4 so far, and what kind of volume growth are you working with, FY25, FY26?
Morning, Nigel. I think good. We are hoping that we will maintain as the normal things, that we will keep concentrating on trying to build a volume growth of around 10%. And in terms of other product mix that we have, because of higher value products selling, revenue growth of 15%. That is normally what we keep tracking for, and we keep looking forward for it. And for us, I guess, with the addition of our Africa operation doing well and our milk cattle feed plant doing well, we are confident of achieving this 10% growth and 15% volume growth.
All right, 10% revenue growth and 15% volume growth in FY25. I presume that would sustain. Sorry, go ahead.
It's 10% volume, 15% revenue.
Okay, 10% volume and 15% revenue growth is what we're seeing. You spoke about value-added products itself, curd sales increasing in the summer months, etc. Typically, value-added has been between the 30-35% band for you in terms of contribution. Now that grows at 15%. In the first 9 months, it's been around 30.5%, 34.5%. Where does that number settle? Do you have an aspirational, target here?
I think we'll just be able to maintain around this 30% number that we have, because last year we had a bit of a larger quantity of ghee sale that we normally, more than normal. That's why we saw the uptake of that number growing substantially large last year. We are hoping this year to maintain a similar number with ghee and our product sale value increasing.
All right. And, you spoke about increasing your operations in Africa, etc. But what I was very, surprised by is that you've actually decided to set up a plant in Maharashtra as well. You were making inroads out there. This 280 crore capex that the board has approved for setting up a plant in Maharashtra, what does that mean for your business coming in from Maharashtra? And, how do you make your foothold out here? And what does that do to your procurement capacity as well? It was close to around 17.1 lakh litres per day. You had this aspirational target of 20 lakh.
So Maharashtra, we are already operating in procurement. We have a small plant in Shelgaon where we are procuring 2.5 lakh litres of milk on a daily basis. The Maharashtra plant that we have announced is going to be set up with a capacity of around 10 lakh litres, which means we'll have a 60 tons of powder capacity and 2.5 lakh litres per day of other liquid milk and curd selling ability. We are looking at starting this operation within, say, 18 to 24 months from March of this year. It should be coming into operation. I think the first day go, we will be looking at adding at least to 3 to 4 lakh litres of procurement there. And from there forth, we'll try to achieve full capacity. So I think in 12 years or 3 years' time, we should achieve our, the aspirational goal of 25 lakhs. It will move from 20 to 25 lakhs.
All right, in 3 to 4 years, the aspiration is to move from 20 lakh litres procurement to 25 lakh. And what does this foray in Maharashtra, a more, formidable foray in Maharashtra do to your overall sales mix? Because what we see right now, 35% Andhra, 40% Karnataka, 25% say Tamil Nadu and Telangana. Maharashtra, do you have an aspirational target, say 5, 10, 15% coming in from Maharashtra over the next 3 to 4 years?
I think as the overall base increases, we will try to look at it as even 25, 25, 25 across the 4 states. Telangana will be a much smaller procurement because Telangana milk is not there sufficiently. So it will be mostly Andhra, Karnataka, Tamil Nadu and Maharashtra, which will contribute 25% each for our overall mix. In a manner of speaking, it also de-risks our states. If some state prices are lower, some state prices are higher, we'll be able to maintain the average basket more comfortably with this equal split of 25% each.
Okay, all right. What about your market share? Could you tell us how things are shaping up with regard to that? I think briefly you had spoken about that your market share in Tamil Nadu could go up by around 100 to 200 basis points. Has that happened? And update us on your market share in the geographies that you have present.
See, basically market share in Tamil Nadu is going up because we're also spreading a lot more of the area, more than the depth. We're also going for the width of Tamil Nadu. Other markets like Andhra, Telangana, Tamil Nadu and Karnataka, as usual, Karnataka has been our largest in volume of our share, followed by Andhra, then Tamil Nadu and then Telangana. It maintains the status quo is the same. I think the overall basket of the market has improved, and therefore we have also maintained our share of the markets that we're operating.
So what does the number stand at among private players and versus the overall market?
Each state it differs. I think in Karnataka, among private players, we would be number 1 in Karnataka. Coming to Andhra, we might be between a 2 or a close 3. That would be the number that we can look at. In Tamil Nadu, again, we will be number 2 or 3 in private sector. In Telangana, we are, I think, number 3 because we have between 3 and 4. We are a little lower in Telangana.
I ask you is because, Hatsun Agro bought Milk Mantra in Jan 2025. There has been consolidation among private players as well. What does that do to competitive intensity?
Nothing, sir. It's more of consolidation that we are looking at. And like I've been saying earlier, I think in the days to come, you will find more and more of the dairy industry consolidating. Because I think from when milk was liberalized, we are now coming into the 30, 35 years of operation. And the changeover between managements and styles of operation, we will begin to see a lot more consolidation happening in the industry. That's my personal view.
Okay, Mr. Reddy, how adventurous are you then? Are you looking at some inorganic growth? Should we be hearing about something in the coming few quarters? You got a smoke on your face. That's telling me a story. Tell us more.
So we constantly keep looking at a mix between acquisitions and our own organic. But we look at acquisitions in terms of the value of price that we need to get and for us to get it at a right price in which we think we can operate better. So we are always constantly on the lookout. There is 1 or 2 will always be there on the anvil. But we will also keep looking at how do we expand our areas in India, and in Africa we will deepen our presence.
So any North Indian player that you're looking at?
Not specific as areas, sir, but definitely there will be a lot of inbound interest that comes in, and we keep evaluating them on a regular basis.
All right, just a final question before we let you go. This Orga feed, you said that animal feed will also be, one of the growth drivers of the company. 100 to 120 crores was your revenue target in FY25, which I'm sure you will, given the first 9 months run rate, achieve in terms of revenue. What's the prognosis here? How big can it be over the next 2 to 3 years?
The present capacity that we have has the potential of reaching up to 300 crores of revenue. I think this 120 in the next year can close to 200, and then it'll come to the 300 crore. And when we reach the 300 crore capacity, and if our milk procurement volumes also increase, we will have to add another 1 more plant, but we will take it at the appropriate time when these capacities come to closer to fulfillment.
And we're left with your margin target. If you could give us a sense of the margins that you're looking at next year and the year after.
So basically, we are now reaching the higher either double digits or the higher single digits. We are targeting to maintain such margin profile as we go forward.
Always a pleasure speaking to you, Mr. Reddy. Thanks a lot for joining in and filling us in with how you see your business shape up. We'll keep an eye out in case of inorganic growth and with regard to market share as well. A pleasure talking to you as always.